Good morning. Today is Monday, July 22nd, and I want to talk about just a couple things today real quick. The TBT trade, TBT ETF, the ultra short Lehman 20-year Treasury bond. As you recall, went long last week at a price of $74, right? And looking to get long again at 72.5. In fact, if this thing were to continue to drop, I would be looking to buy it about 70, 71-ish down in here as well. I'd be willing to put on a third position. And again, it's not averaging in because the first trade or two is a losing trade. It's because I want to build up a bigger position in this market, thinking obviously that the market's going to go higher. Again, this is a rate play, an interest rate play, and the interest rates should continue moving higher, trending higher, and this is a great market to take advantage of that. Again, TBT, ETF. We've had many trades in this market over the last year, and I've been telling you about it and what I think about, obviously, interest rates. If you think interest rates are going to stay next to zero, then it's not for you. But again, I'm just looking to pick at this thing. So that's why I'm long. I'm long at 74. Just missed getting long again at 72.5, and I'd be willing to buy it again down here, roughly about 71, roughly near that 50 exponential moving average. Okay. Second trade I want to take a look at that we're long here, doesn't look too good, is eBay. Friday was a real, look at it, took out the high like I explained to you on Friday's video. It took out the high in the morning and then completely reversed. And once the market took out the low of Thursday, after taking out the high first, I knew this market would continue moving down at least that day. And it was a big down day actually, right? That's what I call a creation of an outside vertical bar, or a creation of an engulfing pattern for those of you that prefer to use candlesticks, right? Once one extreme of the prior day is penetrated, and then the market reverses that same day and takes out the other extreme, that's typically a pretty good, if you're long and the market takes out the high of the prior day and then it reverses intraday and takes out the low, you most likely want to be out of that trade, or you could even go short the market for a quick scalp trade to the downside. Not scalp trade, but a day trade. And doing that would have actually worked out really well. Look at it. Took out the high of Thursday of 53.85, traded up to 53.92, and then reversed and took out the low of Thursday at 53.16 and went down to 52.12. The market actually dropped over a point and actually closed at 52.19, almost a full point below the low of Thursday. But I decided to keep the trade because I'm not risking much. I'm only risking 2 points on this trade. My initial catastrophe stop loss on this trade is 51.39. Went long at 53.39. I'm still long this market. I'm going to keep it in. It's below the 200 exponential moving average, so it is what it is. And so far, it doesn't look that great. And hey, that's all you can say about it, right? Let's move on real quickly to the E-mini S&P 500 chart. As you recall, the market's taken out the all-time high, and we've actually closed above that all-time high twice now, on Thursday and Friday, right? The all-time high was 1679 3/4, closed at 1689.5 on Friday. Actually, one day. Friday closed above it. On Thursday, closed at 1680.5, closed 75 cents above the all-time high. So we've got two closes above the all-time high, which is very positive. I definitely want to be a buyer on any pullback, but to let you know that the last few days I have been selling puts. Okay, let me tell you exactly where I've been selling those puts. I've sold the puts on the SSO, so let me flip to the SSO really quick, and that's the market that I'm selling the puts on, because again, the SSO mirrors the E-mini S&Ps. It's 2 times the index. All right, what I've done is I've sold the August 16. Okay, August 16th is when it expires, that Friday. August 16th, the 81 put. 81 right there. Okay, so if the market continues going higher, or if it just pulls back, I'll collect the premium. Okay, I collected $1. I'm collecting $1 on that premium. 1 full dollar. Now, if the market pulls back on August 16th, the SSO closes at below $81, I'll be long the underlying, right, in the SSO. But my average price, since I collected a buck, will be $80. Okay, so this white horizontal line represents where I'd be long the underlying of 81. But if I'm actually put this ETF, my average will be $1. Since we'll collect the $1 premium, right? My actual net long price of the underlying will be at 80 even, right? Subtract $1 down from 81 to 80. So that's where I'm at. So I collected a $1 premium a few days back, $1, and that's it. I'd love to be long. If this market pulled down and closed, below 81, I'd be long the ETF, and that's great. And I'd still collect the $1. I collect the $1. A premium, which is a great trade. If we get any big pullbacks down in here in the next week, I'll be selling more puts, but at a lower price. Okay, and I'll let you know exactly what I'm doing here, okay? So have a profitable day, and if you've got any questions, let me know. Talk to you tomorrow. Bye for now.